Hello and welcome to Options Guy TV. My name is Brian Overby, the author of the Options Playbook and your host for the next, but we'll call it 25 minutes here on Options Guy TV. It's Fundamental Friday, and I'm going to keep the theme going with SpaceX. It's obviously in the news headlines. Everybody's wondering after the IPO, did I miss out? Did I miss out? Let's chase it higher. It went higher, and now it's collapsed on down on the fact that after having a record IPO, as far as funding is concerned, they came back and said, no, we need more. And so now the market is punishing them. So if you did not partake in the rapid buying of SpaceX on the way up, well, maybe you're considering it now. And how would we take a position in SpaceX using options? So welcome to Fundamental Friday. Before I get too far along, I have to let you know that options are risky, and if you're going to trade options, you should read the characteristics and risks of standardized options. Past performance is not a guarantee of future results, and we're going to be showing some real trades today. So I just want you to know that's not meant to be a recommendation. Okay, so at this point, we're going to take a step back, and we're going to go run over to Tradier.com and run into the paper trade account. And I always like to mention that if you do open up an account with Tradier, you have the ability to place the trades right along with me. So you have your own paper trading portfolio that you can execute trades in. And so with that said, there's a link down below the video. Click on that link, open up the account, and let's start trading. Let's get into this process of learning how to trade options inside Tradier.com, which is the basic option trading platform. On Mondays and Tuesdays, I always use the Tradier Pro software, and we talk about a little bit more advanced trades. But right now, I'm going to actually blow this up one here. Blow up the browser screen just a little bit, and we see that SpaceX, here it is today. SpaceX is hanging in there right now, down 78 cents on the day. The high in SpaceX was right around 125 before the fall, and it fell as fast as it did on the way up. Now we're down below the IPO price at 152. There's still a lot of volatility premium that is in SpaceX. And we went through a scenario in the basic videos, which there are 4 of them. And if you do sign up for a Tradier account, we do send out all that series of basic option trading. It's yours for signing up. And when we're looking at a trade, talked about in the cash secured put selling, that we want to look at stocks that have some volatility and some predictability. And our example was in XYZ, which is now a stock symbol. It's not a fictitious stock anymore. I've made many slides that have XYZ in them, but it's block trading, Block Incorporated. And that stock kind of fits that mold. It's a fairly liquid stock. It's got a little bit of volatility, and the path of least resistance has been to the upside, and it's not a utility. It's not a grocery chain. It's got a little bit of volatility, and you need that to make cash secured put selling a routine that you like to do each and every month on stocks that you want to buy. So with SpaceX, we got a lot of volatility, and that's kind of the issue of bringing it up in a very a basic fundamental Friday show. But I do think a lot of people are thinking about it. It's a little bit more expensive. You're talking $152, so you're looking at $15,200 to buy 100 shares outright. We're going to try to do it by selling a put, saying that we will take on the obligation to buy the stock at the strike price of the put. So we're targeting a spot that we would be willing to buy it. Now, in my views, and this is taking the basic video that we did about cash secured put selling and going a little bit further. And I always like to say, if I'm selling a cash secured put, it usually means that I just want the stock. So you can target a limit order and say, well, I saw the Fibonacci ran into the Bollinger Band and it crossed a moving average, and because of this, I want to buy SpaceX. Well, in my instance, there's really, first of all, there isn't a very long chart in SpaceX because it hasn't been trading on the public market for that long. But I just either want to buy it or I don't. So I have a tendency to sell something that's very close to where the stock price is at, because my scare with a stock like SpaceX is that I don't buy it and it ends up at 225 again, and I missed out on an opportunity. So I look at it as how much premium, how much option premium would I be okay with if I was wrong and I didn't get to buy SpaceX, right? Instead of like with a limit order, I'm trying to target a price at the bottom, and the stock comes down and it gets $1 away, and it doesn't make that last dollar, and you miss it, and it just goes away. You get nothing for your limit order, right? If we do the cash secured put, you at least get to bring in a premium. But if that premium's only 1 or 2%, well, now SpaceX has gone up 10% or 15%, let's say, and all I received was just a real good dividend, I guess you could kind of look at it as. So if I'm using cash secured puts, I really want to buy the stock, and I'm really trying to lower that price. So much so that sometimes I'll consider even selling something that's a little bit in the money, because I want the stock. I want it put to me, and I want to get paid if I'm wrong. If I'm incorrect and the stock doesn't come down and I don't get the opportunity to buy the stock, well, then I want to make sure that I bring in enough capital. And that's the concept that I have looking at SpaceX today and looking at a cash secured put situation. All right, so we're going to go out and I'm going to give you 2 different options. This is the Tradier.com paper trading event. So this would all the tools that I'm showing you today would be part of the paper trading app if you signed up for a Tradier account. SpaceX is at 151.75. It's down $1.25. You got the calls on this side, you got the puts on this side. If we scroll down, we see this is the drop down menu for the different expirations, and it's very straightforward in that I like the dates are written out inside the Tradier platform, and also it mentions the days to expiration. Now I'm going to look at a 14-day and I'm going to look at a 28-day. Normally with normal stocks like XYZ or maybe a Walmart, I might go out 30 days. Even actually, we talked about a Netflix trade in one of our webinars too. But Netflix right now, doesn't have the AI race, some volatility, some predictability. It's an oxymoron, right? No stocks necessarily have a lot of predictability, but you want enough volatility in the underlying stock that the premium that you receive is worth doing the trade. And if it's not worth it, then just why are we messing with the options? Why are we selling something and just not bringing in enough cash to satisfy our thirst for percent returns? Okay, 28 days is where we're going to start, and then we're going to go down to 14 days. So we got cut in half. That'll be a nice scenario. We're going to go up to the July 24th expiration. Once I do that, the chains will adjust, and normally with the chains, you're going to have the most at the money is where the chain is going to rotate to, if you will. And we're just a little bit out of the money. So this is a good strike. 151.72. We're looking at the 150 strike. We see the bid is $10.20. The ask is $11 on this scenario. So we'd look to send something to the floor. We'd probably work this order. There's enough volume in SpaceX that you should probably fill somewhere in the middle, if we will, between the bid and ask price, and we're going to end up sending that to the trading floor. But well, let's click on it. Let's put it in the order ticket, and then we'll talk about it. And so I can do it one of two ways. We can either click it, or I click send here, or I click sell, and then we got buy, and so the S is sell, and then it's send to ticket. So now we're going to send it to the ticket. We never enter market orders, so we're going to come in at a limit, and our midpoint is $10.70. I'll probably fill it at $10.40 just to get it filled inside this paper trading account, and we'll look at. But if I'm starting to work this order, I'm going to put a market in. I'd probably come in at $10.50, somewhere in between where here's the bid price if I sold it at market, and here's the midpoint. And then here's the asking price if I were to buy it at market. So I'd probably be somewhere right in the middle. I'm going to start and do my math with $10.70, which the math is fairly simple. SPX is at one. The strike price that we're looking at is the 150 strike. That means if the stock comes down below 150, they can put the stock to us at 150. So I need to have $15,000 in my account to do this trade. So that's the capital that we're putting up. And we're saying we have $10.70. So we were talking about 7% of well, actually 7.13 if we want to get more exact on it, of the capital involved for just saying that I will buy stock that I want to own over the next 30 days at 150, 28 days, at $150, and I get to keep that premium. So if it does get put to me, I'm buying it at 150 minus $10.70 because I get to keep the premium. So we're going to use that to help buy the stock. So that means I would be buying it at 139.30. Now I'm willing. Are you willing to buy it at that price? This is how I would approach this trade, but I'm getting paid 7% up front on, and I'm going to round off to a 30-day option contract. And if every month went by and SpaceX just kept running, and I could pull in 7%, so there's a lot of ifs in there, but the math does matter because this is the concept of it, and this is how I like to approach cash secured puts. And cash secured means that I have the capital to be able to buy it. Okay, so if I take 7% times 12 months and I do that over 12 months, that's 85% for the year. 86 to be, if we round up, 86% for the year. So you could go out and in theory, sell at the money puts in SpaceX and have the stock run away from you every 30 days to the point that you don't get the stock, and you can pull in 80% for the year. There's a lot of ifs, like I'm saying, there's a lot of ifs, but this is what I mean by I want to bring in enough premium that I'm okay if I don't get put to stock. Now, I did the scenario saying that we're going to do it every month in SpaceX, but if SpaceX starts running too high or it comes down, right, and it keeps going down, because that is possible too. It's a very high valued IPO. And I got the stock. Now what am I going to do? Well, you can go on in and sell calls against it if you would like to try to bring some premium to do the capital. But bottom line, I just get tired of SpaceX because it's not doing what I want. Well, now I want to go out and find another stock, and I want to bring in the same amount of premium. And if I'm doing this routinely, not necessarily on SpaceX, tomorrow it's Block Trading or Block Incorporated. And then the next day it's in Intel. And then the next day it's in Micron. And the next time around, but as long as I'm bringing in that same amount of premium when I'm doing this, and I'm okay with the fact that every once in a while I'm going to miss out on an opportunity to the upside where the stock's just going to take off. I can bring in enough capital on a monthly basis to reward myself and enhance my trading just from income alone. Now, realize SpaceX can go down, and it when it was at 200, nobody thought that it would ever go down to 150, and it did. So once again, there's a lot of volatility in SpaceX and not a lot of predictability. But because of that volatility, you're getting paid. You're getting paid for putting this option contract together. And if you have any questions on this, please do put them in the chat box, and I'll be happy to try to address them. Now, at this point in time, we're going to take a step back and we're going to hear from our sponsor, Tradier. And when we come back, we're going to look at the 14-day put option and talk about the trade-offs between doing a 28-day long cash secured put versus a 14-day.
If you've been watching this show thinking, this all sounds interesting, but how do I actually start? That's where Tradier comes in. Tradier is a brokerage platform built for traders who want professional level tools without the complicated barrier to entry. As a beginner, what matters most is simplicity, reliability, and cost efficiency. Tradier gives you a clean trading interface, transparent pricing, access to stocks, ETFs, and options, and the flexibility to grow as your knowledge grows. What I like about Tradier for beginners is this. You can start small, you can learn, you can practice responsible position sizing, and you're not locked into something that won't scale with you. There's a link in the description below where you can explore Tradier and open an account when you're ready. Trade smarter, not harder. Use the right tools from day one.
All right, welcome back. So SpaceX at 152.60, I changed the chains up a little bit. We went to 14 days going out to July 10th. They have 2.5 point strikes in this expiration. And sometimes you're limited by the strikes, and different stocks will have different strikes. Some stocks that are extremely liquid will have 1 point strikes. And you see that if we get below 150, that's the case with SpaceX. But on the higher strikes above 150, they've decided to go 2.5. So this is the cutoff point right at 150. And that does make sense in the normal marketplace. Normally, they would say if a stock's at 200, then we're going to go to 10-point intervals. That used to be the rule. And if it was below 200, we'd do 5-point intervals as far as the strikes are concerned. In this day and age, they're not limited by compute power, so they can have as many strikes as they'd like. And if you think about it, every time the stock moves 10 cents, they got to change all these quotes on all these strikes. So that was an issue back in the day, not an issue anymore. So if I look at the 14-day, if we're going to compare apples to apples, we would look at the 150 strike put, which is $6.82. But now, if I sell that 150 strike put, I'm not quite bringing in the 5% that I'm chasing here. So I have to do the 152.50, saying I'll buy it at 1,000, or I'll buy it at $152.50. And in this instance, it's 790 by 840. Probably going to put this one in. Yeah, let's go in and let's take this. Let's sell this put. Clear it out. We're going to sell here, send it to ticket, and we'll go limit. And there we go. $8.15. So if I do $8.15 and I can fill it somewhere close to that, I'm now bringing in the 5%. That is the goal. I'm not always going to get 5% because, once again, this is a little bit more volatile stock, especially on a 14-day option. But I always want to remain close to that. And in this instance, I would rather sell the 152.50 strike as opposed to the 150. And that is the reason why. It's all about the difference in premium. And we'll call it $1.30. Just looking at the asking prices, it's $1.30 difference between the two. And so if I do that and I want to say, okay, I'm going to do this on a 14-day basis, and if I can put the stock, that's fine. I'm going to sell calls against it and bring premium saying I'm willing to sell the stock at the higher price. And we're going to do a seminar here shortly connecting the two. Probably to stick with SpaceX just because we're in here. But at if we got it done at, we'll call it 690 on the 150 strike, and I'm going to divide that by 150. We're talking about 4.6%. Giving up about 0.75%. I'm okay with that if this is your price, but I'd much rather get the premium. And so this is a great example. 14 days is not that far out, and you're still getting a ton of option premium if you're willing to buy the shares. I also want to emphasize that if you do this, you can do it in an IRA account, in a retirement account. Cash secured puts are if you get if you fill out the cash secure, sorry, let me say that over again. If you fill out the option trading application for your retirement account, cash secured puts is one of the lowest levels that most people will be approved for. So this is a strategy that you can do in a retirement account. And then it even makes more sense that you want to bring in higher percentages of capital that you can actually use if you want to take cash out of your account and use it to actually pay bills and do whatever, and using your investment account in that way. So keep in mind that if I'm going to do a cash secured put, that I am not necessarily chasing a price that I want to buy the stock. I'm chasing a premium that I want to receive. And so in this instance, on the SPX trade, with the stock at $153, I'm going to look at selling the $152.50 strike put as opposed to the $150 strike put, mainly because I want to bring in over 5% premium in the next 14 days to the July 10th expiration. And all I'm saying is that I'm willing to buy the stock at $152.50. And I'm to show you that I'm willing to buy it, I'm going to put the cash in the account and have the cash available to buy it if the stock is put to me at that strike price. All right, so let's sell this one. This will be the official paper trade. We're going to sell it at, right now I see the market is 750 by 840. We got it at, I'm going to put it in at 8 to make sure that we get filled. We're going to sell the July 10th expiration, $152.50 strike put. We're selling it to open the position. We're doing the limit price at the midpoint, and this is good for the day only. Let's preview it. Make sure everything looks right. And we see here's the estimated profits, or I should say estimated proceeds that we can bring in, $879.65. And boom goes the dynamite. Order has been sent. So let's go back to the dashboard, take a peek at it. And I do see a couple of good mornings. Hello, everybody. Micron is doing something today. Ran all the way up, came all the way back down. What a volatile move in Micron, right? We talked about it. I see a few people in there that was part of Options Guide TV last week. Here's our order. It's pending. I'm going to make sure that it gets filled today. But here's our, right now, SpaceX, the option contract is at 790 at the midpoint. We got, this limit order at 880. That should be 8. Let's go and change that right now. Modify it. Success. Trade modified successfully in this instance. And then we see the limit now at $8. Market is at 790. I might have to adjust it one more time, but this order is open. And if we do get an execution, it will say filled. And that's it. No other questions inside the comment box? Then thanks for stopping in to Fundamental Friday. We're going to build on the concept of cash secured put selling, selling calls against positions, protecting a position. If you are one of those people that did buy into SpaceX, we looked at a collar trade where we bought a put and sold a call against the position, against the 100 shares of stock, to try to protect the position. So that is also a trade. If you go back and look at the previous videos on Fundamental Friday that we did on SpaceX. So we gave you a way to hedge the position. We're giving you a way to try to dip your toe in the water, see if you're willing to buy 100 shares at $152.50. We're going to go only 14 days. And we're going to continue on this path and try to use options to enhance your stock portfolio. And I think that's a great way to start trading options before we get into the advanced strategies like selling credit spreads or buying debit spreads. In this instance, I always think of options for beginning traders as most traders already own stock. Very rarely do you come into just trading options and you've never even owned a stock before. But this is a way to use options to enhance your stock portfolio. Thanks for stopping in. We'll see you next Friday.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.